markets have actually doubled since the global financial crisis. But in recent months, the market just seems to have come off a little bit. Some of the IPOs, which got investors very, very excited, have just come down below their IPO price. This is quite unusual. It suggests to us that people are looking a bit more rationally and looking for value, and that suits us just fine. UK companies are performing pretty well at the moment. Corporate results have come out for last year, 2013, were pretty good. For first quarter 2014, they've been quite reasonable as well. One of the themes we're seeing has been the headwind of sterling appreciation. So a lot of companies that we have in the UK make their earnings overseas, and when that is translated back into sterling, it's not as high as some people have expected. So that's been an issue that we've had to deal with. Some of the companies that we owned weren't particularly at the epicenter of the excitement that investors had in other parts of the market. So that was an opportunity for us to step in and increase our weightings in some of these types of companies. It might be in some of the oil majors, for instance, the likes of Shell, the likes of Total. These are companies which have, in the recent months, have actually done very, very well, simply because they had been laggards. We've also been able to introduce two new companies into the portfolio, Ultra Electronics and Inchcape as well. And this is towards the lower end of the valuation range. At the moment, the market is split somewhat into very expensive parts of the market and relatively cheap parts of the market. So those are two examples of companies which we think are offering long-term investors sensible returns at reasonable valuations. You can only pay dividends if you're growing your business and you're generating cash. And so our investors like to see sustainable dividends and to see those dividends grow in the future. And we find that in some of these companies in the UK which have all those characteristics. The outlook for investing in UK equities is pretty reasonable, we would say, so long as you take a long-term view. It's always very difficult to know what markets are going to do over the next few months or so. As we know, markets have done pretty well and valuations are perhaps full, certainly not at the cheap end of the range. So we'd look to, as ever, invest in the best quality companies, companies that have very strong business models, sensible balance sheets, selling goods and services to their customers around the world, which we expect will continue. And so the prospects for those types of companies are pretty reasonable over the next few years.